What's going on, guys? It's your boy Tim Aslan here for Counter Trend Capital, and today we're going to be looking into what is going on in the crypto space. We have two back-to-back lawsuits by the SEC in 24 hours. First, Binance was attacked yesterday. Today, the target is Coinbase, and we're going to be talking about why that is and what the future implications are. So, let's start with Binance. So Binance, was the first one to be sued early Monday morning, and the market reacted. Bitcoin dropped 5 to 6%. BNB coin dropped 10%, and we were actually in a short from BNB from around $340. So that was a great trade. But let's actually look at some of the charges: unregistered exchange, unregistered offer and sale of crypto assets, failure to restrict U.S. investors, misleading investors. There's also charges of basically filed against CZ, which is the CEO of Binance. There's charges that they knew that they were misleading investors. They knew US people had access to the exchange. So there's even a charge of commingling funds. And so that's a really, really big one. They're saying that CZ took money that users deposited, and he took them and put them in his other companies, shell companies out of the Cayman Islands. So these are some really, really serious allegations. And what I want to point out is Binance has no real headquarters. If you try to send them mail, if you try to send them, cease and desist orders, they don't list an actual country where they're headquartered. And CZ is actually quoted saying, I'm wherever I am is the Binance headquarters. He said that. So it's super sus, to be honest. And they definitely have ties to China. Binance originally started in China, but had to move because of China banning crypto. But I am 100% sure they have ties to China, and the SEC knows that, and they do not want Binance controlling 90% of daily volume in the crypto space. And so now let's look at the Coinbase lawsuit. So the Coinbase lawsuit is basically a copy and paste of the Binance lawsuit, except it's not as serious. There's no charges of commingling funds, and there's no charges against the CEO. So this is actually good. Because essentially there's no criminal proceedings. It's all civil, whereas Binance has criminal proceedings, like commingling funds, which is a lot more serious. But guys, I want you to do some critical thinking. Why would the SEC allow Coinbase to go public a few years ago if they were in fact a unregistered brokerage, as the SEC claims? Why could they IPO? You got to ask yourself these questions, and I'll tell you what I think just in a second here. So let's look further down here. Talks about the Howey test and other previous regulation that has been occurring over the last 50, 60 years, mostly in the stock market. But what's really important to know is that the main thing that the SEC is going after is Coinbase's Earn program, which is the program where users can deposit crypto and actually earn a percentage yield monthly and yearly on that crypto. And the reason why they're cracking down on this the most is because the SEC is buddy-buddy with all their banking friends. And right now, if you go to a bank and deposit money, you're going to get 0.01% a year. Versus if you deposited USDT or USDC on Coinbase, you can get 2, 3, 4% per year on that return. So banks need money in the banks. They can't have users' money going just sitting in Coinbase. They want the money in the US banks, especially because in the last few months, what have we had? We've had major bank runs where users have withdrawn billions and billions of dollars. You've had the largest withdrawal on banks in history, and banks need that money because they don't just hold the money in the banks. They actually go buy bonds, commodities, stocks with that money. So they need that money. And when places like Coinbase are taking money, the banks aren't just going to sit there and allow that to happen. They're going to talk to their buddies at SEC and make sure that that can't continue to happen. Now, the next thing that's important, and I think another reason why they're doing this, is because, like I said, the SEC has buddies in lots and lots of high places. For example, CME, derivatives exchanges, NASDAQ, etc. These companies are all losing money when users go to Binance to trade. I think what the master plan is that the US and these companies specifically want all that money to be traded on US based companies. So before I get into all that, this is Binance's annual revenue in 2022. It was $12 billion. In 2021, it was more. I think it was about $20 billion. $20 billion of revenue. I mean, these US companies are just drooling at the mouth seeing these numbers. Do you think they want all that money to go to a foreign company with ties to China? I don't think so, guys. So let's dive into what happened recently. So yesterday, the same day that the US SEC announces a lawsuit against Binance, CBO wins approval for margin trades on crypto futures exchange. So if you don't know who CBO is, it's the Chicago Board Options Exchange. So they're the largest US options exchange with a trading volume of over $1 billion. And that was in 2014. So that's definitely over $2-3 billion now. So these are the big boys that essentially will benefit the most if a company like Binance goes away. And this is literally on the same day as the lawsuit. CBOE will be the first ever fully US regulated exchange that users can trade with leverage of crypto derivatives. So, I mean, this is going to be huge. They're going to offer Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and USDC. So look at this. CBOE Digital is the only US registered exchange that allows us for both spot and derivative trading. Ask yourself, do you know anybody right now in the Twitter community who uses CBO Digital to trade? Because I personally don't. But when Binance goes away and when other exchanges go away, everybody's going to be flocking to regulated exchanges, and they're going to get all that $12 billion of revenue. Not only that, that's $12 billion of revenue right now. Imagine once the space really blows up, they're going to have $20-30 billion of revenue at least per year. So pay attention to this, guys. This isn't in any mainstream news. Right now, everybody's just simply talking about Binance this, Coinbase that, but nobody really sees this in the headlines, right? So next is NASDAQ. So NASDAQ is a huge multi-billion-dollar company, and they're releasing, this was back in March, they're releasing their own Bitcoin and crypto custody platform. Why would this multi-billion-dollar national company even care if they think that the space is going to zero? Ask yourself that. They've been building this in the background for years. Likewise, Fidelity and BNY Mellon are in the pursuit of their own cryptocurrency custody platforms as well. This is institutional grade custody, guys. This isn't just your mom and pop retailers, putting in money here. This is like serious cash. Minimum $500 million are going into these large crypto custody companies. So ask yourself why this is happening. Next, here's Fidelity. Right now, on Fidelity, you can trade crypto right now, mostly Bitcoin and Ethereum. I expect the coins that were listed in the Coinbase and Binance lawsuit to get delisted from, Coinbase and other exchanges that have that right now. But guys, what I really want to stress is that this is great for the space. We need regulation. We can't have a company like Binance controlling 90% of the volume while they commingle funds. And literally, one of the other charges was manipulating the market. CZ owns a market maker firm. He owns 80% of a market maker firm that was one of the first ever market maker firms on Binance that literally controls the order books of Binance. They are 100% manipulating the market. CZ has 150 traders, wallets that literally trade against their users. We can't have that in a free market. This lawsuit is very, very good for the space, and I am more bullish than ever. Yes, it's going to take time. It might take a few years. There's going to be pain. A lot of coins are going to go to zero. But the ones that make it, Bitcoin, Ethereum, these are going to be legitimate projects in the eyes of the law, and we'll be able to trade finally in the US on real registered derivative exchanges with insurance. And it's going to be awesome, guys. I promise you. You just put your head down, wait a few years. Don't give up. Don't give up, guys. Here's another one that I want to show you. So Coinbase derivatives to launch institutional Bitcoin and Ethereum futures. This is on June 2nd. And do you know what day this launched? I'll find it right here. It launched, okay, it doesn't say it in the article, but this launched on June 5th, the same day that Binance was sued. So Coinbase derivatives to launch institutional Bitcoin and Ethereum futures. Institutional money, guys. This is billions of dollars that's going to come to the market. And, you know, it's going to take some time, but look at this. The derivatives arm of America's biggest crypto exchange said that BTI and ETI futures contracts are sized at 1 Bitcoin and 10 ETH per contract. 1 Bitcoin per contract. And these institutional traders are going to buy hundreds of contracts at once per trade. So this is tons and tons of money. Oh, here it is. On June 5th, Coinbase Derivatives Exchange will launch. So, guys, pay attention. Pay attention. This is on the same day that Binance gets sued. You know why? Because the headlines are Binance getting sued, not this extremely bullish news right here, guys. So also, why would they release this one day before they get sued? I'm telling you, it's all intertwined. And you know another thing? Gary Gensler is not an idiot. You've seen videos of him when he was teaching at MIT talking about cryptos, saying most of them aren't securities. The technology is amazing. You can literally watch those videos. You think he flipped his whole opinion since then? Hell no. He did not flip his opinion. He has big players that he has to answer to as the regulatory body of the SEC. They don't work for us. They work for the big players. And the big players want a registered, USA registered exchange where they can make lots of money. And that's going to happen, guys. And another thing is, do you think that it's going to be easy to become a multi-millionaire from crypto? Do you think that they can let every Joe Schmo who bought Dogecoin become a millionaire? No. They need to have uncertainty in the markets. They need to create things like this to shake people out. And what I want to point out, guys, what I really want to point out is that, let's go to TradingView real quick. We had here's the COVID lows. We had a 1,800% gain since 2020. Essentially, literally 1 year, we've had this percentage gain. Do you really think it's going to be that easy for just, a few months of sideways and down before we get another, 1,000% explosion? Literally right here is when the most average people who did no research bought into crypto. They're still holding. Do you think they're going to get, allowed to make, a 2x, 3x return just from holding 1 year? Hell no, they're not. Like, up here is when all the whales sold their bags to the retails. It took, let me get a chart with more data. it took, you know, it took 3-4 years of whales accumulating before we could have this upthrust move. We're going to need something similar where we have a long sideways period of whales accumulating. BlackRock is allowing their customers to buy on Aladdin. That came out a few months ago, but nobody's talking about it. BlackRock owns a significant portion of USDC. Why would they do that? Think about it, guys. We need whales to accumulate. We need a prolonged bear market. The SPX just came off highs. This is going to break the low as well, in my opinion. So if this move happens, what's going to happen to crypto? We need time for the markets to heal. We need time for the markets to relax. We need time for regulation to come in. And it's going to take time. But don't give up, guys. This industry will make lots of people very, very rich. And you just have to wait. You just have to be patient. You have to connect the dots, guys. And another thing I want to point out is, why haven't they talked about Ethereum? The only place that they talked about Ethereum was when the New York Attorney General sued KuCoin. And inside the lawsuit, they said that Ethereum is a security. But the SEC has never said Ethereum is a security. I believe Ethereum is one of the chosen ones. It's going to be deemed a commodity. Bitcoin has already been deemed a commodity. So pay attention to those two mainly. Find some good projects that have real world utility. Invest in those as well. Do research. Look back on how those projects actually were released. Were they ICOs, or were they released in more of a decentralized manner? Where can you buy them? Are they on Coinbase? Find out all that information to make sure that the SEC can't sue those ones as well. And then just hold, buy slowly. There's no rush, guys. We're not going to go to 100K in a month. There's literally no rush. Take your time with this. Do the research. And in a few years, I'm very confident in this space. Another thing I want to mention too is we know that the digital economy is rising. In the next 4 years, there's going to be a fourth industrial revolution where AI takes over many, many jobs. We're going to have driverless cars. We're going to have, we've seen it already. McDonald's, you walk in, you talk to a screen, you order, and eventually a robot's going to be making your food. So we have all these digital economy features that are coming very, very shortly. We need something like blockchain to integrate that. A good example is a company called Humble. Right now, they're working on digital ID. They're working on digital registration. They're working on digital deeds to homes, digital passports. All that stuff is coming, and it needs blockchain. So this industry is here to stay. I don't care what anyone else says. Just be patient. We have Bitcoin targets as low as $3,000, and it wouldn't surprise me if we get there, because if Binance goes down, they control 90% of volume. Bitcoin's going to get wiped out. USDT is an important one to pay attention to as well. USDT might get sued by the SEC as well. You never know, because think about it. BlackRock owns a significant portion of USDT's largest competitor, which is USDC. So, of course, I could definitely see USDT become a target, and a lot of the market cap will flow to USDC. So be careful then. But guys, I'm telling you, if we hit that $3,000 price target, if we hit $5,000, if we hit $10,000, start buying a little bit. Just buy, hold, wait. Get your coins off of exchanges, because exchanges could go down. Especially if you run into a situation like FTX, there could be clawbacks. You don't want to show that you've had your coins on those exchanges for a long time. Even Coinbase. I think Coinbase will be fine. They're a public company, but get off there. Another thing that I just thought of as well is, let's look at Coinbase real quick. The actual stock. Right now, their stock market cap is about $11 billion. Guys, if Coinbase gets to the market share of crypto that Binance is, their revenue would be more than their market cap per year. So I personally think Coinbase is a strong buy. These crypto fees are outrageous, and they're going to make a killing off fees once there's more adoption, especially from their institutional partners with that new futures derivative platform that they just launched. So I'm bullish on Coinbase long term. I'm bullish on Bitcoin long term. I'm bullish on Ethereum long term. And guys, you know that I'm not a big holder. I'm a trader, and all these trades have been extremely fun to catch. Right now is a great time to learn to trade. So definitely hop into our Discord if you want to learn to trade. We've caught in this short, we've caught in this long, we've caught in this short. So learn how to trade. This is a trader's market right now. But with that being said, once we get in these lower areas and these lower price targets, I'm definitely going to fill up my spot bags. And I recommend that everybody hold as much Bitcoin as you can. Remember, you're not buying some coin. You're buying the actual software, the actual processing power, and that's going to be used for many, many things going forward in this digital economy. And even if it doesn't be used as a actual store value or wherever Bitcoin maxis claim, there's a market trading this coin. There's a market, a huge multi-billion-dollar market, multi-trillion-dollar market now, actually, with the market cap. So just like when you go to a casino, I mean, that doesn't do anything for society, right? But it's still there because casinos make billions of dollars. So I don't think that this is going to go away. I don't think the greedy capitalists in the US are just going to lose out on tens of billions of dollars off of trade fees and just get rid of this. They're going to allow trading. We're in a very gambler-centric society, especially now with the regulation of sports betting. So I really don't think that this coin will go away. And even if it's not used for the main things that Bitcoin maxis say, it's still going to be used to trade because there's going to be so much money to be made from it for all these big companies, especially CME. I mean, CME already has a Bitcoin futures right here. What's the other one? Grayscale. Once this is all said and done, they're going to launch their Bitcoin ETF. So I'm super bullish on this space more than ever. We need regulation. Don't miss out on, just thinking that this space is going to go to zero, because I really don't think it will. And if it does, you know what? That's the price to pay. Any investment can go to zero, but an investment like this has the most upside out of any other investment, in my opinion, right now. Just be smart, have risk management. Don't bet the house, buy stocks as well once we get our dip. And yeah, guys, that's my rant. I was at the gym and I just thought about all these things and I wanted to make a quick video, guys. So thank you so much for listening. If you've been in this space for a while, stuff like this happens very often. But to me, it's incredibly bullish, and, only time will tell. So you can either give up, sell all your cryptos and leave the space, or you can invest, stay true to it, do your research, connect the dots, look at all the things that the big institutions are building, and, be patient. Rome wasn't built in a day, guys. Thanks for listening, and subscribe.